Folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, July 18th, 2008. Well, today, folks, we saw somewhat of that pause-ish pullback day across the board. Now, the Dow and the S&P were flat to positive, and the NASDAQ got hammered just a little bit, but nothing to the point where we would start to worry yet on the downside for the NASDAQ. Now, those of you remembering yesterday's video, remember that on the NASDAQ, you had the first hit and pierce of the 20 moving averages. The S&P and the Dow were kind of moving up into that range, but they hadn't quite touched. So it's interesting to note that the NASDAQ was the one that hit yesterday and pulled back. And we'll go into these charts, and I'll show you guys all these key technicals across the board. But nonetheless, today was a mixed bag on the market. Really a relatively quiet day compared to what we're used to seeing out there in the markets. The volume died down a little bit after options expiration this morning. You only did about 1.9 or so to 2 million on the contract side of the E-minis. And the overall market was not as volatile. You didn't have the mega moves. You did have a mega move this morning, and we're going to go into that, folks, as I bring up the chart here. So here's the chart of the S&P futures, the ESU8 September 08 E-mini S&P 500 contract. And again, we use this because it tracks the market, and the moves are more, a little more powerful to the eye. So what you're seeing here over here is pre-market, all right? And what I want to point out here is this is when the market was down substantially. This is after Google yesterday, Microsoft missed earnings along with Google, and also Merrill Lynch missed earnings. So the market's trading down substantially. Now, the one hiccup in this whole picture pre-market was you had Citigroup's earnings. Now, Citigroup came out much better than expected. And look at the bid that came in the market. This took the market all the way back to the flat line and slightly to the positive side. And once you got up to this point, this is pretty much where the market went all day. And I'm going to show you that as I draw on the lines. All right, so let me bring out my trend tool. Alright, so what I'm going to show you here is, you see the markets rallying off of that Citigroup news on earnings, and what I'm going to show you here is we're just going to draw on lines across the tops in the market and the bottoms in the market. And look at this. You see this basic channel that we stay inside of. And you might say, well, this is, looks pretty whippy, but believe it or not, this is only about a 8 to 10 point move in the S&P from the highs to the lows, which isn't, compared to what we've been seeing lately, that is not that volatile. So again, notice the pulls and the pullbacks and the rallies, and you can see it's coming right off the trend line. So you have a hit of the top of the market, and this comes right around 9 o'clock, 9:30, around the open. And the highs at 9:30, which is right here, that's pretty much the highs all day in the market. You never get above that anything significantly, and you basically pull back. And the pullback into the 10 o'clock time frame is actually the lows on the market. So very interesting, and this is something that us traders know, is that the high on the pre-market level, especially at that 9:30 open, and the 10 o'clock low, if you get sometimes in that period, you can often track the market the rest of the day, and that happened to a T today, as you can see here. And again, that's something to note for future purposes of trading, and you can see that the market was in that range all day long, and you actually hit off those levels 2 times on the downside and 3 times on the upside. And you basically ended, give or take slightly lower than the highs of the day, which, as we mentioned, NASDAQ was down about 29.5, while the Dow was up about 50 points, and the S&P was flat on the day. Now, the interesting thing about this market, guys, is that you're now looking at a possible pullback situation and consolidation. And we're going to show the NASDAQ chart as well on the daily. But number one, you can see right here is you had the 3-day push or the 2-day push here, and you kind of had a flat day right there, right? Basically, the highs of yesterday were never really taken out, and you're approaching this 20 moving average, and we all know that at some point you have to touch that 20, and that's what's happening. And that's one of the biggest things that in the money stocks we preach, is that if you stay away from the 20 moving average, really the last time we touched fully was right back here. That's a long time away to stay away from home base. And eventually you're going to come back to that level. You didn't quite touch it here, you didn't touch it here, and you never touched it down here, but now we're finally coming back to home base. And you always have to come back to the 20. It's just something that naturally occurs, and the longer you stay away, the more likely you get to a period where you're going to have that push back. Okay, so always remember that. But again, notice the push up the last 2 to 3 days and the pause day today on the SPY, as you had a nice little move sideways to slightly up. And again, we're going to continue to look for consolidation here. And what's consolidation? Consolidation is a time period in the market after a large move up or down where the market kind of does a reverse a little bit. So you get a sideways to slightly lower move in this position, or if it was a down move, you'd get a slightly sideways to slightly up move. Now, this has been a dramatic move up, so we're anticipating, and this is key, guys, we're anticipating a solid consolidation period or a small pullback again, and then another break to the upside, where we take out the 20 moving average and we possibly will make a run for that 50 moving average. But that again, we're not talking about that till mid next week or so. Once you get a pullback, and we'll continue to analyze the charts. The charts will tell us when that's going to happen. You need a certain pattern price to occur, possible Fibonacci retracements. We'll look at possible other patterns that we've developed to look for numbered days and so forth on the pattern. And when it's ready to go, we'll try and alert you right away. Alright, so stay tuned to the videos, obviously. Now let's take a look at the NASDAQ, because the NASDAQ, notice on this chart before I take away the SPY, which mirrors the S&P, how we didn't quite pierce the 20 moving average right here, which is the yellow line. Now let me show you the NASDAQ chart. NASDAQ, look at this move. Pierces, and then you get the more dramatic sell-off. So that's the key there, is the difference. All right, when you pierce a moving average, it's more likely you get a more powerful pullback, as opposed to when you're still below it, you kind of get that little bit of a pause and a possible drift sideways to lower. Again, the NASDAQ pierced to the 20, and you got a more powerful move down of about 30 points on the NASDAQ today, as Google, Microsoft disappointed on earnings. Now, Google got hammered today, down 52 points. And that's a big drop for Google even. Baidu in sympathy was down 11. Apple was down about 6 and change, while Research in Motion, RIMM, bucked the trend, trading up about $2.10 at the close. Now, overall, the financials. Let's take a look at the financials, because they were actually up a little bit, and they've actually moved above the 20 moving average. Now, many of you will say, well, okay, it's moved above the 20. Doesn't that mean that you're going to start to see a move towards the 50? Not quite this fast, and this is another key to remember, guys. When you close above the 20, but especially if you don't close above the previous day's high, notice how the high here on this previous day, it does not close above that high. This is also a signal that you probably will get some consolidation, and the key on this consolidation, the beautiful thing about this move would be as if it could stay above the 20 and consolidate sideways to lower in this pattern. The best way would be as if it stayed above the 20 moving average. If it can do that, then you're setting yourself up for a nice move to possibly the 50 moving average. And we do think that this will eventually get to that 50 on the financials. But the financials, in all fairness, they've run a long way now. You're talking about Lehman Brothers. We can pull up that chart. Lehman was down at $14 to actually make that $12 back on Tuesday, Wednesday, and basically had to move all the way back to $19, as high as $20. So that's an $8 move on a $12 stock in a matter of 3 to 4 days. Tremendous. You also had stocks like Merrill Lynch, Freddie Mac, UBS, you name it, the financials out there have had a big push. And again, you want to see the consolidation. And I want to point this Lehman chart out. It's the same chart. Move up to the 20, touch the 20, consolidation day starting. And again, that's what we had mentioned to look for yesterday in the charts, and it looks like that may be starting. So we're going to look for more of that action on Monday, Tuesday, and then as we get into the pattern early next week, we'll start analyzing it, computing our numbers based on our proprietary analysis, and from that, we're going to look for the next move higher. It may take a week. It may only take a day or two. We'll know as the days come, all right? Once we get a specific calculation triggering a specific volume size, a specific pattern on there, we'll be able to tell much more accurately. But nonetheless, the patterns are there, and this is what you want to see. As a technical trader, you're trading on technicals, which is price pattern time calculations. You can even use some volume, and again, you see the light volume on the Lehman today. Notice this volume today, guys, compared to the previous days. Nothing even compares to the volume the last few days, especially today being very light. And on the SPY, you can note that too. Look at the light volume today and on the pause day. That's what you want to see. If I could have my wish for a consolidation pattern, I'd want to see this trade slightly to the downside, staying right below, but right on top of this 20 moving average as it comes down, and I'd want to see continued light volume days Monday, Tuesday, right in this range. If that setup occurs, then that's much more likely that you're going to see a breakup on heavier volume. And again, you pull back on light volume, the upside much more positive. If you're pulling back on heavy volume, that's not a good sign. So we will continue to watch that, folks, and see where we head. Just to look across the board, it's been a beautiful move this week, guys. You guys know we were expecting that move off of this level here on the SPY, which was our turn date level. All right, we recaptured that level in one swift move right here, and then the following 2 days up and consolidation beginning, which is fine. And again, just to mention, the turn date, which was based on price pattern time, the time issue did not work out. That's a failed time pattern, but our calculations on price and pattern hold true, and that level is specific to this market, as we've been mentioning. You can see how specific it is. It gets back above. Now this is a bullish sign to this market again. Should we break back below, then we'll have to recalculate and see if this is just consolidation or do we go back to the lows. But nonetheless, you want to see this market stay above these lows down here, folks. Can't stress how important that is. All right, if this market can stay above and just consolidate in this upper range above this line, then you're looking at a positive move in this market coming very shortly. Again, we do think there's a possibility for next week, maybe mid to late next week, if we get the 2 consolidation days, for a powerful move. All right, guys, let me just scan through the market one more time, but that seems to be it. This weekend looks to be a beautiful weekend in New York, and I hope to get a little R&R, and I hope you all do the same. All right, and again, watch for the move next week of consolidation. Watch for lighter volume, possibly to be in this market, which would be a good sign if we're going to consolidate. And then we'll watch for a break up. It could happen as early as Tuesday, but we're also thinking that it would be more powerful of a breakup if it consolidated for a few more days. Have a wonderful weekend, guys. We'll be back strong on Monday. Come join the chat room. Come join the Swing Trade Alerts. Fascinating knowledge to be learned in that chat room, that's for sure. Great group of individual traders in there that all help each other as we play by play this market and call out our personal trades. We'll talk to you then. Take care.